Hi, this is Joe Rabil with Invest Like a Pro. Wanted to follow up on the last video, which was the two time frame pinch play, which was on a monthly and a weekly chart. And I'd like to show the exact same trade. It's not exactly the same, but it is the same method. And it is a two time frame pinch play, but I'm using a 10-minute and a 2-minute chart of EMR here. So I'm going to start again looking at the little higher time frame on the left side. And I'm going to actually draw in a trend line here that shows the downtrend line being broken for the first time in 3 or 4 days. And again, what I'm trying to do, I'm trying to look for the earliest point where on the higher time frame, it looks like the trend is shifting. And in this case, instead of waiting for a confirmed change in trend, I get the break of the downtrend line. And it actually fails at the 18, but what it does is it forms a pinch play. I consider this a pinch, even though the red line, the MACD line, is not coming in closer. I'm getting a pullback in price, and this line is sort of hesitating, and this line is moving up more aggressively. So I would consider this still a pinch play from that standpoint, especially because I've broken the downtrend line on the higher time frame. So once I have that, I'm going to go to the lower time frame, and let me just zero in on that so we can see it. And when I look at this chart, the same thing holds true on this time frame. I am looking for the same situation where MACD crosses above the blue line, the signal line, and then pulls back and gets a 2-bar pullback. But I would prefer on one of the two time frames, I would like to see the pinch actually accentuated. And if you notice on this pullback, you did make a lower high here and a lower high here, but there really wasn't much of a pinch. So if I don't have a pinch on this time frame, what I would consider to be a more accentuated pinch where it's very visible in the MACD, and I don't have one on this time frame, it's kind of an aggressive trade. So I would prefer to either have it on this time frame where I get a deep pullback and I know that I've got a deep pullback based on the MACD, or I get it on the lower time frame. And in this case, it would have taken place here. So I would have broken the downtrend line, I would have moved up, pulled back, broken out above this peak, and that would have changed the trend to the upside. That would have been my 1, 2, 3 change in trend back to the upside. And now I'm getting my first pullback on the lower time frame to the 18. And notice this, the more accentuated pinch play that is developing on the MACD. Clearly, the blue line or the trend line or the signal line is rising, and the red line or the MACD line is pulling back to it. It's very crystal clear. And I've got 1 lower high, 2 lower highs, 3 lower highs, 4 lower highs. And as soon as this bottom one is taken out, this last bar is taken out at 73, I want to get long. And I'm going to put a stop in at 72.94. So I'm literally doing this off of a 2-minute chart, and I'm risking about 6 or 7 cents. If it turns on a dime and comes back down, I'm stopped out and I lose 6 cents. If it works, because I'm playing a turnaround play, I'm gonna definitely go for at least 2 to 1. If I had more time in the day, I mean, this is occurring at 3:20. It's kind of late in the day for me. I definitely don't know if I want to do this late in the day, but I would definitely do the trade and try and get, a 2 to 1 move. That would have happened. You would have probably been in and out if you went for 2 to 1. So let's say you risk, $500 and literally in about 10 minutes, you've made 1,000. So that's kind of how this would play out. It would be that type of a trade. Depending on how you want to risk these type of patterns, it depends on the size of the account. I would be a little careful about being too aggressive in terms of how much you risk in these trades, because it is kind of a make it or break it type of a pattern. And it's the type of thing that, your odds are probably 50-50. I'm not trying to say that you're going to be right 70 or 80% of the time doing this. But if you do a 2 to 1, so if you risk 500, or let's say you risk 200 to make 400, and you're right half the time, you're going to make a lot of money. And I think you have to think about trading that way. You can't assume that you're going to be right every time. It just doesn't work like that, especially on an intraday basis. I think if you do it on a weekly chart, a daily chart, weekly chart, monthly chart, your numbers are going to go up. You're going to have a higher win rate. But on interdays, with the tweets out there and everything, you could get in right before a tweet comes out, and 6 cents is nothing in a stock like this. So you got to be really careful if you're going to trade intraday. But I thought this was really worthwhile to show that this is essentially the exact same pattern where you break the downtrend line, you rally up, you pull back on the higher time frame with improving momentum characteristics, and what I would consider to be, and what I describe in my book, Invest Like a Pro. This is definitely one of the signals that is it's essentially a divergence signal in a way, because price is making a double bottom and the MACD is just not pulling back. So I kind of like that at the end of a move after it's been going down for 4 days. And then you go to the lower time frame and you're looking for the 1, 2, 3 change in trend in the first time you get your pinch play. So very similar to the one that I showed on the monthly and weekly not that long ago. And I just thought it was a good example just to keep in mind. Please remember to subscribe. And if you do that, you want to hit the bell to make sure you get notifications. And also make sure you hit the like button as well, so I know which videos are the ones to continue to focus on. Thank you.